The Korean government painted a more optimistic picture of the nation's economic outlook in the latter half of the year on Thursday when it revised up its growth forecast to 2.7%. But as our Yoo Li-an reports, the latest figures show the Korean economy still has a long way to go before it's out of the woods.
The nation's industrial output fell last month, reflecting the sluggish domestic economy amid ongoing global uncertainty. New data released by Statistics Korea on Friday shows production in the mining and manufacturing industries fell 0.4% in May compared to a month earlier. The contraction came after output increased for the first time in 4 months in April, showing the sector is still struggling to gain traction. A separate survey by the Bank of Korea on Thursday shows Korean companies' profitability shrunk in the first quarter of this year. The survey of around 1,700 companies showed companies relying heavily on domestic sales, particularly those in non-manufacturing sectors, suffering from dwindling profits.
When looking at the profitability of companies in the first quarter of this year, manufacturing firms, mostly major conglomerates, saw a rise in profitability, but non-manufacturing companies fared less well.
It also shows the number of companies that aren't able to pay back the interest on their debts from their business profits rose from 31% to 36%. All in all, experts are not overly optimistic about the coming months.
The possible tapering in of the U.S. Federal Reserve's quantitative easing policy remains a risk. If the yen continues to weaken and interest rates rise further, companies will see their profitability worsen.
Analysts say it remains to be seen whether the government's stimulus measures, which include $15 billion in extra spending and an interest rate cut, will be enough to pull the nation's growth rate up to the government's target of 2.7% by the year's end. Yoo Li-an, Arirang News.